Well, good morning, West Coast and Central U.S., and good afternoon to the East Coast and everybody in between. My name is Brad Etheridge. I'm the Chief Marketing Officer for the Center for Tax Strategies and Resources. For those of you not too familiar with us, we are a membership-based organization. Some people have said we're similar to a study group on steroids. Our members have access to some phenomenal talent from our industry, including top CPAs and tax attorneys, as well as top producers in just about every area or field related to financial services. And folks join our group to have access to those people, as well as gain training on techniques, proper words and timing, closing, better ways to market your practice. Kind of like a virtual sales office for our members. Today is an example of that. Leading up to our Academy events, we always do a series of webinars, or what we refer to as kind of vignettes, where it gives you a little bit of an idea of the type of talent that our members have access to. Today will be no exception to that. As the members know, this won't be a complete webinar with all the answers and facts, because we really like folks to be members to get all that. For the members of our organization that have joined this call to brush up on the topics, remember you can view the entire webinar on our website through the member portal. For those of you that are guests, we'll jump in a little bit later and kind of give you a little better understanding of what it takes to be a member, why somebody would want to join, and the other tools and talent that you'd have access to help grow your practice to the next level. So with that, I certainly hope you enjoy the webinar. Again, I'm Brad Etheridge, Chief Marketing Officer, and we are so proud to have you on our webinar here today. For those of you that don't know about the center, we are not an IMO or a PPO or a broker-dealer. We're a membership-based organization. I guess probably the best way to view us is to kind of see us as a study group on steroids.
Never heard that before.
You like that one? You feel free to use that one.
It's really good.
The center itself, needless to say, we have a little bit of fun going through this stuff, but the center itself creates a level of education and differentiation for advisors. We have, as members, we have some CPAs, we have some tax attorneys, we have a lot of financial planners. We've got some folks that are asset gatherers or just pure life insurance agents, and one thing they have in common is they want to be able to provide better solutions and opportunities to their clients through strategies, concepts, techniques, and training that they otherwise would not have access to. So the center itself is providing this free webinar today. We're going to tell you about an event we have coming up that could be career changing for you here at the end of September. We'll talk about that in a few minutes. But before we do that, I want to introduce the other person here on your screen, Simon Singer, who's the founder and my partner in the Center for Tax Strategies and Resources. For those of you that don't know Simon, he's been very successfully in our industry since 1966. He's in the top 1/10 of 1% of all financial planners in the U.S. And has been for years and years and years. He's written several business bestsellers. He's quite a sought-after speaker when the world allows us to speak publicly. And he has been a member of some very prestigious organizations such as Financial Planners Association, Advisors in Philanthropy, and is the past president of the Forum 400 and is the National Humanitarian Award recipient, which is quite an honor. One thing about Simon, I'll tell you that you wouldn't know from his bio, he lives for this stuff. I have never met anybody who's better getting a client to disclose more information and eventually look over to you and say, well, why wouldn't I do this? And that's usually his biggest closing line. So with that, Simon, say hi to everybody.
Thank you, Bradley, and hello, everybody. Thanks for taking the time this morning. I think you're going to be very pleased with what you hear today, because it is something that is duplicatable and replicatable, and you don't have to be an expert in the tax planning business, as I'm not either, as Brad is not either. What we've been fortunate enough to do is put together a faculty of just some incredibly brilliant tax attorneys, CPAs, and a few financial planners that helps us look a lot smarter than we actually are, because some of this stuff can be very intimidating. What you're going to see today is going to be very intimidating, but what it is a fee-based tax reduction plan put together by a tax attorney. And so we're going to share with you what the pieces are and then what the numbers are and then how you might be able to avail yourself of utilizing this, because the fortuitous part of my being in the business since 1966 is the fact that over time I've been able to build a lot of really good, solid, tight relationships with people that are a lot smarter than I am, but I've also learned how to help them generate revenue. And that's kind of what we're doing, is we're teaching people how to do enough proper discovery and enough discussion of labels of various strategies so that they have the ability to create strategic alliances with tax attorneys and CPAs and help generate revenue for their practice and for their family. And we get to do the kind of things that we know how to do, which is assets under management or annuities or life insurance, et cetera. But the one thing that I will suggest to you is when you increase somebody's budget by reducing their taxes on a statutory basis, backed up by a tax attorney and a CPA with audit protection, et cetera, you find that you're talking in a different world than what most of these people are used to. And so with that bit of a warning, I want to tell you, don't be intimidated. Just listen to the overview. We're going to talk a little bit about the components, but not a lot, because neither Brad or I are really smart enough to get into an in-depth discussion of the details. Just suffice to say, there are details. They are significant, but we're going to do a broad overview of that today. Would that be okay, Bradley?
Yeah, add something to what you just said there. I'm sorry, expand on something you just said, because it's such a key point. You know, you said it can be intimidating, and it is. And one of the first slides are going to talk about all the different types of taxes out there. You don't need to have the answers. You need to have the technique to keep the conversation going. You've always been a big proponent of questions that lead to questions. And it's not that you shouldn't know some of the answers, but you should know enough to be able to move the conversation along with the client, get the client engaged, excited, that type of thing. So we'll do an overview of how we present a concept of a tax reduction plan being done by a CPA for a client, and give you kind of a feel for how that would sound. And it's a tool that our members have access to be able to find additional dollars to fund products and solutions, make cases larger, and solve problems for the client. So,
and it's a fee-based series of strategies. There's not a product involved. There are places where product can fit, but it's not required in order to be able to substantially save people taxes. And I think you're going to find this more than intriguing. So
yeah,
Bradley wants to take over.
yeah.
But just as a heads up, we're working in 3 different offices right now. I'm in California. Brad is in one place in Michigan. Bobby's in another place in Michigan. Todd's on his way to a doctor's office. Yeah. So we're going to be. This isn't going to be as smooth as you might hope, but I think you're going to like it. Go ahead, Brad.
I think it's going to be smooth. I like smooth. Smooth's good.
I'm good. I'm fair with that.
All right, check this out. Here's the technique. Bobby, next slide. How's that? Is that subtle? You know, when you're looking at all the major types of taxes that are out there, if you want to look at a landscape, you know, it's funny, a conversation, Simon, you and I've had this conversation with members and between ourselves more than once. You know, when you're talking about tax reduction to a client, what's the first thing that usually comes to the advisor's mind?
Yeah. All right. Go ahead. Well, it could be a couple of things. It could be, are you a CPA, or I already have a CPA and I'm well taken care of?
Yeah, and then from a client's perspective, what you usually hear, what an advisor usually said is, well, they're looking for tax deductions, right? I mean, show me how to do bigger qualified plans or whatever. All those things are fine, but that's not the only taxation that matters. So if during accumulation you don't have taxes, if during receiving the money itself and distribution you don't have taxes, if during the growth you don't have taxes, those are also key components that if you put together a strong financial plan, all those factor in. It's just the client's usually kind of looking for what they think is a tax deduction. Our question always is, would you want to pay less taxes than you are now? Doesn't necessarily mean it comes in the form of an immediate deduction. Bobby, let's click through those. You've got individual income taxes. We're obviously all aware of those. You've got corporate income taxes for those clients that own the businesses, which make up a large percentage of the people that most of you and we work with in our practice. You've got payroll taxes that are in there borne by the company itself. You've got the capital gains taxes, which, by the way, members of the center can quite comfortably say that you can eliminate most, if not all, of the capital gains under almost all circumstances if you have the right techniques, which is one of the things that we train and spend a lot of time with the members.
So let me just interrupt for a second. Most of what people hear about are deferrals. A pension plan is a deferral. However, we have some exit strategies out of pension plans that make it actually a tax saving device, not just a deferral device. You've heard of monetized installment sales. Those are deferrals where hopefully you earn enough on the money that you didn't pay in tax in order to make a profit and still have enough money left over to pay the tax 30 years from now. There's things like that that you're familiar with, and there's going to be things like that that maybe you're not familiar with. But most importantly, what our crew specializes in is timing, combining, and sequencing of things that you individually know about, but you've never thought about how to put them together and what the end result is. It's monumentally beneficial.
Absolutely. Sales tax, which obviously a lot of the states have, is another one. Gross receipt tax. And with gross receipt tax, more on the corporate end of it, it's basically taxes or gross sales regardless of profit. So it's just a way for the IRS to jump back in regardless of profitability and charge the tax. You have value add taxes, which is a consumption assessed on the value added to each production stage for a company that's manufacturing a product or service. You've got excise taxes, obviously, which everybody's aware of, or sin taxes, sometimes it's called, manufacturers of tobacco and alcohol, that type of thing.
I thought sin tax was when I made a mistake on my financial calculator. I get sin tax error 27 or something.
That's SYN.
Oh, got it. Okay.
SIN, but thank you for that. That's good. Okay. Property taxes, which obviously we all pay. California gets paid even more than everybody else. Tangible personal property taxes. From a corporate standpoint, the tangible corporate, or basically it's additional taxation on goods or services produced. And then state gift inheritance taxes, which we spend a lot of time trying to figure out how to lessen that burden for the clients. So if those are the major types, what we're going to focus on today is more of a service that the members can provide to the clients. For those of you that aren't members yet, there still is some value in what we're talking about, because if you understand the components of taxation, you can have an intelligent conversation with the importance of finding reductions or elimination of unnecessary taxes paid. So we'll spend a little bit of time on that today too.
So Bradley, let me ask you a question. I'm the client. You come to me and you say that you've got some ways to be able to help save taxes, and I say, well, I've got a CPA. They're doing everything possible in order to reduce my tax. What do you say to that?
That's excellent. I'm glad you've got somebody that that you're comfortable and competent in, that you feel is competent, and I congratulate you on that. What I would say to you, Simon, is this: there is obviously a lot of components to the tax code, and we work with a firm that specializes in these aspects only. So their primary focus is finding efficiencies or reduction of unnecessary taxes. It doesn't require you to change your existing counsel. But these are specialists, very similar to you going into the hospital and being referred to Mayo Clinic instead of your very competent surgeon. Your very competent surgeon is awesome, but if it's something that's very specialized, they will refer you to an expert or a subject matter expert. This is exactly the same thing. Does that make sense?
Yeah, it does make sense. I think you could probably add to that. There's 73,000 pages in the tax code, and our people specialize in about 30 of them. And specialization in the medical community, it gets down to an orthopedic surgeon, hand surgeon who specializes in the third knuckle of the right pinky on your right hand. But I think the way I would be able to expand the conversation even further would be to say, I understand you're well taken care of, but let me ask you a question. When's the last time you ever got a call from your CPA with a piece of prospective advice to save the income tax? And the answer is almost always never. Think about that concept, almost always never. So then what you would say afterwards is, well, we've got a group of people that, perhaps I might be able to arrange some time with that might be able to review some of the things you're doing and give you some additional value. Would that be of interest? Never make a statement, always turn it into a question so you get participation from your prospective client or even your existing client, because this is a way to go back to your existing client and offset the complaint that people in our industry always hear from their clients. The only time I ever hear from you is when you want to sell me something. Well, here's an opportunity to basically bring some value to the table that, by the way, is going to enhance your ability to sell them something because you're going to increase their budget, but they don't have to. All they can take and put it in their pocket if they want to. They can make their business more profitable, more saleable, et cetera, et cetera. So we're just going to talk about income taxes today, but there are things to do with every single one of these taxes. The simplest one, by the way, is estate, gift, and inheritance tax. That's the simplest one. The most difficult one is for the W-2 employee. That's the most difficult one. So we're going to deal with business owners because there's millions of those in this country, and a lot of them make some money, and I know those are the people you'd like to work with. So Bradley, why don't you take over again?
And there is stuff. I mean, there's incredible things you can still do for a high earning or those in the C-suite of the corporation. So don't think just because they don't own the business. But this, as Simon had just mentioned, this focus is primarily on that small business owner. Well, this seemed like a pretty good place to kind of jump in. Hope you're enjoying the program so far. You know, I've been doing this for 37 years, and I absolutely love our industry, and so does the rest of the team at the center. That's one thing we all have in common. We don't really feel like we have to work for a living because we enjoy what we do. Question I've got for you in the audience is, when is the last time a single idea added 50,000 or 100 or 150 or $300,000 to your practice revenue? Think about it a minute and realize that our members can say that they have that happen on a very regular basis. The reason folks join our group is to get ideas and concepts and training and techniques and better ways to market their practice. This is a very interesting organization because we don't have an axe to grind. This isn't an IMO hiding as a training organization. It's a training organization that just happens to know a lot about our business. We have an event coming up called the Academy. We're going to be holding it toward the end of January, early part of February. We'll announce the date shortly. That is a 3-day program where we bring in unbelievable talent. They will bring new ideas and concepts and techniques and tools to double or triple your practice revenue. If you join or if you don't join our organization, you will walk away with ideas that can add a lot of zeros to your practice revenue. So pay attention to the announcements at the very end. We'll give you an email address too if you want to ask some questions about what you've heard, or if you want to find out a little bit more about why somebody would become a member or try to become a member of our group, or a little bit more about the Academy. You can reach out to me. We'll make sure we've got my email address up there. So enjoy the rest of your program. Simon, something happened yesterday on a client Zoom that you and I were on together that it was such an exception to the normal rule. And when you asked the client when's the last time he received any prospective advice from his current counsel, his CPA, he said, well, just last week he told me I could take our 401k deductions from 50,000 total with my wife and I up to 90 if we did profit sharing.
Right.
And there was a hesitation, which great answer, right? That's the first time I've had that come up in a long time where somebody did. But then he stopped a second. He said, you know, that's the only thing in 22 years he ever called me on. Do you remember when the client said that? I was kind of chuckling to myself. So there isn't a bad answer that can come from asking that question.
Sure.
And even if the CPA had, it doesn't mean that the CPA has brought up everything, because again, the focus on those 30 pages of the code that we know better than most. Okay, let's talk a little bit about target client for these reviews. And I want to, just prior to going into this slide, give you just the mechanics of how this works, or how it works for the members. We can take a client's last 2 years of corporate and personal returns, send them electronically into a secured portal to a firm that we have set up that will review their last 2 years of taxes. The client does not write a check for this up front. They will do a complete analysis. They will come back to our member or the advisor and let them know what they found and what it would cost to fix it. So if they came back in and said, we found this, 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 and this, and here's the fee, you as the advisor know that before the client knows that. If you like the numbers, then you say, let's set up an appointment with that CPA and we can discuss the terms and conditions and what the engagement fee would cost. If the client wanted to switch CPAs, which happens quite a bit, they're just not happy with who they're working with, that's fine. If they want to use this firm, that's fine. If they want to have this firm work directly with their current CPA, that's fine also. So it's an awesome way at no risk to the client to be able to get a review done. What it does is it uncovers usually uncovers a heck of a lot of unnecessary taxes paid, which you can turn to financial products or solutions for the client. So I don't do this just because I love seeing people save money, because of course I do. I do it because it increases the budget I have to work with to solve the client's problem. And it gives me great credibility in front of the client to, as Simon just mentioned, do something for my existing clients that doesn't involve a product sale up front.
It also makes it a lot easier to get highly qualified referrals, because nobody gets excited when somebody sells them a great big giant life insurance policy, or nobody gets excited when somebody puts them into a defined benefit plan and gets them $200,000, $300,000, $400,000, $500,000 a year deduction. But save them income tax. That means that at the next cocktail party, they get to appear smarter than the guy that they're drinking next to. And I'm telling you right now, it's a monumental change. So go to the target client, Vic.
Yeah, that's sexy. Okay, let's talk about the target client. Go ahead, Bobby, throw that up. Ideal ranges are this. It's the client who owns the business that his income ranges between 400,000 and 2 million. Now, could the number be slightly less than 400,000? Yes. Is the number probably less than 400,000 because they're putting a lot of their personal expenses through the corporation? Yes. But at the end of the day, that 400,000 to 2 million range is a pretty big swath. So this firm that we're going to talk about today, this is who they focus on. So, are they going to look good at 3 million or 300,000? Yes, but this is kind of their sweet spot. They want somebody who can control the method of receiving the income from the business. So we're not doing these reviews for a comptroller for another company. We want to deal with the owners of that small business. Maybe it's 1, 2, or 3 partners, or 2 or 3 family members, whatever the case, but they need to be in control of the method of receiving the income from the business. 3 or less owners is ideal. 1 is the best. The only reason 3 or less owners, the reason number 1 is best is that you're talking about one decision maker being able to move the case forward. If you bring in 2 or 3 or 4, can it be done? Yes. Do we do it? Yes. But 1 is usually best just from a decision standpoint. Go ahead and click the next one there. Actually, Bob, I think there's a couple. Well, no, that was all they had really on the grouping itself. So what happens is there's a form that we have the client fill out. The advisor can help the client fill it out, and then there's directions for how to submit the tax returns directly to the firm on a secured basis. Obviously, protection of information and all that's really critical. You don't have to be the go-between on getting the tax return from the client and have that responsibility. So it's sent directly to them, and then they secure that data as they go forward. So let's talk about the process it's built upon. They have 4 key elements that they do when they're doing a review of personal and corporate returns. Obviously, looking at ordinary and necessary expenses, Section 162A. The next process that's built upon the 4 is economic substance doctrine. Simon, touch on that, because that's I've heard you go through this multiple times with clients, but it's an important key.
There are some quote tax reduction strategies out there that sound good. One of them is a charitable structure whereby I buy an asset for $1 today, and I I get an appraisal on what the future value of that dollar is going to be. And the appraisal said that tomorrow, which might be 20, 30 years from now, it's going to be worth $5. And so I contributed to the charitable institution of my choosing at a $5 rate. I get a $5 deduction. I save $2.50 in income tax, and all I did was put up $1. They look good. They illustrate well. They usually have some level of opinion letter, usually the lowest level of opinion letter. But if you think with half a brain, how can I buy something that's worth $1 today and deduct something and claim that it was worth $5 tomorrow? That could be the strategy I'm talking about. It could be conservation easements. You look at things that look too good to be true. The Internal Revenue Service reads exactly the same periodicals, attends the same seminars that we attend, and they don't like things where there's no economic substance. So you bought it for $1 today, it's worth $1. Maybe it's worth $1.05. But to say that my appraisal is based on what the value is 30 years from now is kind of a stretch. And I'm going to do the same thing now on conservation easements. Conservation easement, I understand the concept. The original concept, a family owns a piece of property that they inherited and it was worth $100,000. And today it's 20, 30 years later and it's worth $500,000. And they get an appraisal, it says it's worth $500,000. And they contributed to charity, get a deduction for $500,000. The problem with that is the syndicators have taken that over. And you buy that piece of property today for $100,000. They get an appraisal that says it's worth $500,000 and they take a deduction. Well, I don't like doing things that are on the top 12 list of targets of the Internal Revenue Service. So even if your structure is perfect, the majority of them are not. And so what happens is you will get audited, you will lose the audit. You then have to decide if you want to spend the money to take it to tax court, and maybe you win and maybe you don't, but even assuming you win, you wind up spending enough money with a tax attorney going to tax court where you're going to be lucky if you break even. We like things that are statutory as opposed to hope for, if that makes any sense.
It does. Didn't you and I look at one that was 8 to 1?
Actually, I remember 10 or 11 to 1. Yep.
That just scares me.
I'd love to do it. I really would. I'd love to.
Yeah, be nice to have it.
But I'll tell you something. I don't maintain and establish relationships with professional advisors and with clients for people who get audited, where it's an automatic audit trigger. And even if they win, they're scared to death. If any of you have ever received that letter that has IRS in the corner, you know, your heart starts to palpitate. But there's potentially, you know, a lot of tax saving. That's attractive. That's interesting. Just make sure your E&O is paid for. But the syndicated, it's not the individual conservation easement that's bad. It's the syndicated ones. So if you want to have some fun, look up on the internet the dirty dozen of the IRS, which is things that are on their listed transaction list.
Yeah,
and economic substance is a big deal. Step transactions another one.
Check your E&O coverage also to see what things are restricted and listed, and it could be under a general wrapper, including things that are on the. It's a scary thing to put a client in that position. It's scary to put yourself in that position too. So just be careful. And you know, the Center for Tax Strategies and Resources isn't a risky group. We're not trying to figure out how to fly too close to the sun. We spend as much time turning things down as we do trying to figure out how to package them up for use of the members.
There's so much opportunity in the tax code, and you're going to see that in the next few minutes.
Okay, go ahead and click the next one there for me, Bobby, on the 4, effective corporate structure. This is a really big deal, and it's one that's overlooked quite a bit with the businesses that we have as clients and that we've seen a lot of the members have. The proper corporate structure allows so many more opportunities, and it's not to say, I mean, it seems like everything you come across for the most part is a sub S, and that's the most common, and there's reasons the CPAs give for it and all that. But if you're not investigating the proper corporate structure or a combination of corporate structures for the clients, you're missing out on a lot of opportunities to find reduction of taxes and elimination of unnecessary taxes. So that's part of the review process, going through that with this firm, and then finally a complete and thorough documentation of everything that they've uncovered. One of the questions that Simon and I had with this firm when we first found them is, well, look, you put together this incredible detailed explanation of the tax reduction. You review it with the advisor, you discuss it in detail with the client before they've ever signed an engagement. Aren't you concerned? I mean, what keeps them from just selling away from you? And their answer was amazing. The tax attorney that we work with quite a bit on this said, he goes, yeah, it can happen, and it's happened once or twice in the last 15 years. But we don't focus on that. We do so many things so well that other folks don't do, that we generally don't worry about competition stealing from us. I thought that was a really good answer on their behalf.
Well, they also added to that the fact that they have an audit protection program that basically says included in your fees will be the fact that if you get audited, we'll take and fight on your behalf up through and including tax court.
Yeah, that's a big deal. No, they're putting their money where their mouth is on their strategies. So, okay, good. So that's the process that this is built upon. Ordinary and necessary business expenses under Section 162A. Go ahead and click that up for me, Bobby. Is the business expense in itself or an amount reasonable for the business to take using the ordinary necessary guidelines given under 162? The case tells us what ordinary means at fair market value, and necessary means helpful. So with ordinary and necessary business expenses, there's so many things you can there's so many things that you can deduct that you could justify deducting but shouldn't, right? And when they're doing this discovery, they're not trying to say, hey, you could write off your dry cleaning, but there's some things that are really kind of normal that come up that you're able to deduct. Business lunches that were being held to discuss business, and that could be done at your home. We'll kind of show you an example of when the breakdown comes up and what their review process might look like. But there are so many things, including the Augusta rule and being able to rent your property back to your business for the use that, including getting your kids in there and having your kids, if they have a reasonable opportunity to work for the company, how to use those dollars to set up a college fund and do it through deductible dollars, using the child in the business itself. These are all things that are very common, but not very normally put into place for a majority of the business owners. This is then applied to every expense, but not limited to. So it's including these things: appropriate salary, set using third-party independent reasonable compensation report. So one of the things that we come across quite a bit when we're doing a review is this independent reasonable compensation report. And you've got a client that has an unbelievably substantial income, and they're taking $150,000 for a CEO position in the company they own, that what fair and reasonable would be $300,000 or $400,000, and they're avoiding trying to do that to obviously keep their tax rates down, especially if they have a C corp that owns it, where they're not having a direct connect to the earnings. Part of the guidance that comes back through is saying we're going to identify what those independent reasonable compensation numbers are for that position, because this firm does not want the client to go to audit, because they also provide the audit protection. So it's all tied in together to say, let's make sure that what you're doing is appropriate for the company itself.
Actually, Bradley, there's another reason, and what they're really trying to do is avoid payroll tax, which is difficult. So somebody might be taking $150,000 out in salary and $1 million out in an S corporation dividend.
Yep.
So they'll pay income tax on that, but they aren't going to pay payroll tax. So the reasonable and necessary is both on a high level and a low level. And you want to have the place to save money is not on your tax counsel. The place to save money is not on appraisals to create values that are going to be advantageous to you. So if you think about something, if you're going to sell your home, you want an appraisal that says it's worth a lot of money. If you're going to buy your home, you're going to want an appraisal that shows a low amount of money. So there's a way to create a balancing between those various types of appraisals. And something that you also might want to consider is doing the appraisals through the tax attorney, not directly by yourself, because then it becomes work product of the attorney and it's not discoverable. So if you don't like the results, you might be able to get a different appraisal.
They do in their analysis, they'll go back in and they'll establish appropriate marketing fees or marketing budgets for the company itself too, and they may segregate the marketing to a separate corporate structure. So that enables a lot of flexibility. So even if it's sub S corporation, there's nothing that says that their marketing department couldn't be set up as a C, as an example. And those dollars that are now being funneled into the C corporation would give some opportunity for additional reduction of compensation, perhaps, or write-off of expenses that would not be includable as income. So that's part of the analysis they do when they go through it. And then appropriate rental amounts by engaging an independent MAI appraiser to give reasonable daily rental fees specific to the rented business. Now that would be what I just mentioned a minute ago. It might be using their home to be able to do a business meeting, using the Augusta rule for the renting of the home back for the use of the business and take a deduction for that. So these aren't exotic things, but they're most commonly overlooked. So go ahead and let's kick to the next slide there, Bob. Well, I hope you enjoyed the mini webinar here. Again, just a reminder to those of you that are members that are on this webinar, you can go to our member portal on the website, yourctsr.com. Put in your credentials and you can watch the entire video at your leisure and playback parts that you need to have more clarity on. For the rest of you, hope you enjoyed this. Listen, these webinars are done to entice you to find out more about our organization. It is unlike anything that we're aware of in the industry right now because we don't have a product to push and we're not an IMO pretending not to be. It is about education. It is about building some unity between independents. It is about increasing the marketing for your practice and making you better at what you do, being able to offer your clients better solutions. We like to say that our members are independent but not alone. If you want to find out more about our organization, more about the event I talked to you about earlier, the Academy coming up, I'd be happy to communicate with you electronically. My email's on the screen right now. Feel free to reach out to me. I'll reply to you pretty quickly. And if there's something we can answer questions for you, want to find out more about the upcoming Academy or find out more about membership, please feel free to drop me a line, brad@yourctsr.com, and we'll start up a conversation. I wish you success and health and look forward to seeing you, hopefully seeing most, if not all of you, in a couple months.